Hey there traders, thanks for joining me for this free video from thestockbandit.com. I just want to run through the major indices, take a look at where we are in the overall market, knowing that the levels and the overall price action in the indices is going to influence how individual stocks move, and then we can formulate a better trading plan based on that. So last week was another holiday shortened week. We've seen a few of those lately, but the market was closed on Monday, and we started off the week once again with another Tuesday gap to the upside. That was the third consecutive Tuesday, that's the third straight Tuesday this month that we've seen important gaps to the upside. And while Tuesday itself really did not gather any follow through, we did see a nice trend day higher on Wednesday and then some continued strength into the end of the week. So what that meant for the NASDAQ was a couple of things. Number one, we pushed north of the October high to make new recovery highs. We crossed this 2753 level for the NASDAQ, and now we also saw an acceleration to the upside from this uptrend channel. You can see these two white trend lines that are running parallel over these past 5 weeks or so, where this index has been rallying, and we accelerated higher last week to bust through the upper end of that. And that really shows significant strength, even though on a day-by-day basis it's been a pretty quiet type of a rally. So at this point, levels to watch are these for the NASDAQ. Next stop on the upside for the NASDAQ is going to be up here around 2862. That was the late July peak before we saw this big sell-off move into early August. But that's the next upside level there. If we do happen to pull back a little bit, I would expect to see this 2753 area at least initially get defended. Now for the S&P 500, we saw this index. By the way, each of the indices up between 2 and 3%. So just good solid gains, especially for a 4-day week. So the bulls kind of took care of business on a reduced or abbreviated week, and here we are still working on these short-term channels or near-term multi-week trends here. And that's in addition to the fact that October lows have seen now 2 higher lows, and we're now getting further from that December low to the point that the next pullback could easily result in yet another higher low. So again, back to business here for the S&P. 1294 was the level that I've noted here a number of occasions. We busted through that level last week with some hesitation initially on Tuesday, and then a nice surge higher on Wednesday, which did the trick. We closed above that level, maintained that zone as well into Thursday and Friday, closing about 21 points north of that level. So now we've got a little bit of room here to pull back. If the S&P comes under a little bit of short-term profit taking, then that 1294 may now start serving as some support. On the upside, we're heading back toward this area right up here, which is between 1345 and 1355. So just call it 1350. That's really the ballpark area that I've been noting here, and we're just kind of working our way back up toward that zone. For the Russell, we saw last year this 772 zone serve as a very important zone for a number of occasions. Early in the year, mid-year, during the summer, and then in the fall we rallied right up to it and stopped shy of it. And here we are, we've just now reclaimed that 772 level for the Russell. So the next stop is going to be this level right up here, and that's around 815. Not a major level, but it was one that for an intermediate period of time was meaningful. So that's going to be the next stop for the Russell. And then the Dow, we busted through this 12.3 a few weeks ago. We held nicely above it. So what had been resistance became support. And then last week we lifted and saw kind of an acceleration move away from that level, going out at 12.720 on Friday's close. Now we're just within a stone's throw of this 12.750. That's the level I've been noting here on a number of occasions. It's from last July, and so that's going to be the next stop. Now beyond that will be the May high at 12.876. So those are the upside levels to watch, but we're now facing this 12.750 area. It's going to be interesting to see if we do finally see a little bit of profit taking, if and when we get right to that area. So pretty interesting scenario. The bulls are still in charge. The bears are on the run. They are buying on dips. So are the bulls. It's making for a very interesting situation where both bulls and bears are playing the role of buyers. So something to consider. I would expect that the first pullback that we see is not going to be a deep one. It could be that this market simply corrects by marking time, by moving more laterally than it does vertically the next time we see some kind of a rest phase kick in. So again, expect to see the dip buyers continue to do their thing until they get their hand slapped more than once. So that's what's been paying them for the past several months, going all the way back to these October lows. I would not expect that to change overnight, barring any catastrophic news. So there's a look at the indices. I hope it's a great week of trading for you. Thanks again for watching this video. I will be back soon with more, but in the meantime, trade like a bandit.